Hey y'all, Keith and Jason. Just want to do a quick market update for kind of the month of July, but looking back into June. And it's really starting with this article that I found, and it basically is saying this: home values have been exceptionally resilient. The much anticipated housing crash never came, and home prices actually rose by 6% in 2022 and are expected to move even higher again in 2023. It says, how can home price appreciation be so strong with mortgage interest rates at 7%? And I think the statistics that you're going to go over are going to help answer that question.
Yep. So if we look more granular, we're looking at Middle Tennessee.
Yeah, that was national numbers. This is Middle Tennessee.
This is home. So we've got $475 for the median home price, which is actually flatline year over year.
Okay.
Right.
So over the last 12 months, flat.
Flatline. We thought it was going to crash. No crash. Flatline. And actually in Williamson County, we're up almost 5%.
Year over year.
Year over year.
So in the last year, it didn't crash. It's actually still continuing to climb.
Still gone up. Climbed up. Number of closings did go down a little bit. We're at 4% lower year over year, just a little over 3,200 closings. And then active inventory is actually up 2.5%. So a little bit more inventory, a little bit less closings.
So what do you make of that?
I think that people are still making moves. It's just less out of convenience and more out of necessity.
Right, so real estate right now is a life event business.
Yes.
It's almost kind of like, hey, the real estate industry might be in a little bit of a recession, but the market itself is not.
Exactly.
So where is the opportunity, and where have maybe people missed it?
Yeah, the opportunity is to buy today.
Right.
Buy today at today's prices before they continue to climb up in the next 6 to 12 months, and then refi later. Right?
Absolutely. Take advantage of the lower interest rates and a lower payment. I think the other thing is, and we were chatting about this earlier as well, is we're talking with a lot of buyers right now that are trying to shoot for the dream home. And because interest rates are at an elevated level, they're not able to afford the dream home or uncomfortable with the dream home price.
Yep.
And from a payment standpoint. And I never bought my dream home as my first home.
Yeah.
I think real estate, you got to get in the door and create opportunity for you by buying that first home. Yeah. And if you can buy that first home today, find something that might be a great future rental that will fund the purchase of the dream home later.
Yep. Let somebody else fund the purchase, right? So you get into the game, you're able to have that property appreciate in value. The market is going to cause that to appreciate. Other people are going to pay for your investment, basically. And you're going to use that money to put down on the next home. And maybe the next home is not the dream home either, but it's getting you closer to it. And you're not having to save up for years to hope to buy it only to see the prices go out of your limit. All right, so Keith, we've been talking about interest rates, and there's a lot of questions around those. So, like, what's going on with interest rates? Where do you see them going? What's happening right now? What's going on with the interest rates?
It's a good question, right? So interest rates, 30-year fixed mortgage interest rates follow inflation, and we've seen inflation actually come down dramatically, right? It was up in the 8s, and the last readings of last month were down to 3, right? And so interest rates should be much lower than where they're at right now. The challenge that we're having is the Federal Reserve has raised the federal funds rate so much. You've probably seen this. We've talked about it before, where you can take your money out of your traditional savings account and move it to a different bank, and get a much higher return in a money market account. All right. So what's happening right now is banks are losing deposits, right? And so now they're having to sell assets to make up for those lost deposits. The assets that they're selling are mortgage-backed securities. So what's happening right now is interest rates should in fact be lower than they're at, but we're having kind of an interesting thing in the market where banks are having to sell assets, and we're flooding the market with mortgage-backed securities, which is causing a kind of a supply and demand issue like we talked about in housing. We've got to get through this. So as soon as we kind of get through this and banks stabilize and balance and inflation continues to come down, interest rates will drop with it. That will happen. 6 to 12 months, I think, is kind of that window that we're in for interest rates to come down.
So then what is the opportunity right now?
I think the opportunity right now is, if I'm a first-time home buyer, I'm not chasing the dream home. I'm chasing the home that's going to get me in and get me started.
Get into the game.
Get into the game. The home that I am today, I wouldn't be able to buy if I wouldn't have bought my first home.
Exactly.
And so I think so many times right now, first-time home buyers are wanting to buy the dream home, and they can't do it because of interest rates, and so they're pausing. And I'm thinking, why don't you get into a home that is a great starter home, that would be a great rental in the future, right? Take advantage of the opportunities today, and if interest rates come down, you refinance, you gain equity, and then you move on to the next one. That's the opportunity in the market.
And you have an income-producing property, and you're buying maybe a longer-term home.
Correct.
Yep. All right, so we went over a lot of information in a very short period of time. If you have any questions over the market or anything that we went over today, shoot us a DM.
Or give us a phone call. Information should be somewhere in here. Like, we literally don't have a job unless people have questions. We'd love to help.